all of you have at some point today used UPI. And we have here the people or the person behind UPI from NPCI. Mr. Dilip Asbe was supposed to be here, but due to some commitments he couldn't. But he's sent his most able lieutenant from NPCI, Praveena Rai. She's the COO for NPCI. And we've had the pleasure of connecting earlier as well in a few fintech panels that we had. So just to give you some statistics, and you can correct me if I'm wrong on this. We closed FY24 with 164 billion digital payments, and 4 out of 5 of these payments were through UPI. 131 billion UPI transactions were noted. About 200 trillion rupees worth of transactions were done through UPI. Now that's a staggering number. And if you look at the year-on-year growth, there's a 49% rise in volume and 36% rise in value when you compare, say, last month's transactions to, say, 3 years ago in 2021. So if I may just ask you, the journey so far in UPI payments and with NPCI as well, not just with UPI, I mean, you have all the other payment infrastructure. FASTag is something that has been really picking up. So we'll talk about that as well. If you can just give me a perspective of the journey in the last few years post-pandemic.
Hi, wonderful to be here. Thank you for that nice introduction, so I don't have to go through all those numbers. So it's been, of course, a very interesting, challenging, but fulfilling journey, right? So what's fulfilling is during the pandemic, and since you referred to that, there was a lot of innovative use of digital payments, specifically UPI, that the industry really stood up and took to market to support the physical cum digital transactions that were prevalent at that time. And customers loved it, users loved it, merchants loved it. So there was already a good traction happening, and this sort of gave it a second level of bump, and whoever the users were who came on board have continued on board. And nearly every month, on a going basis, UPI adds anything from 3 to 6 million users on a monthly basis. So I think the love for UPI and how much users really enjoy and benefit from using it has not gone away. The journey in the, behind the scenes, of course, is where the fun intensity is. And that's really about continuously looking at, customer problems and looking at how that gets solved. So there is the entire experiential area. And there's also the piece around technology, right? Experiential area is to look at how do we eliminate friction, how do we make this user journey more convenient, how do we bring more use cases that users require, which go beyond a regular payment, like person-to-person payment, and of course there is person-to-merchant payments, and then there is the e-commerce, right? And then there is mandate subscription. We spoke about that some time back. And now there is, credit on the rails of, these payments. There is offline payments because in areas where, the signal is not very strong. Exactly. So I think looking at every problem statement and solving for that is one part of the journey. The second is to look at what really is the experience of the user. So one is to have a nice experience journey drawn out, but the second is to deliver that experience, which means that any time the transaction is tried, it has to work. And that's the whole, end-to-end piece. And this phenomenal surge of volume looked at the whole supply side of this equation that had to step up and up the game on infrastructure, on technology, how quickly these transactions are fulfilled end-to-end with a high level of reliability and availability. And that creates customer confidence, that creates trust. And I think that's really where, we kind of stand today. And you did refer to the fact that this is not just all about UPI. So UPI, of course, is a big pillar. But there is the whole credit piece with cards, RuPay. Another area where, RuPay today holds nearly more than 10% share of market, starting with hardly 1% or so as of just 3 years back. And there is the instant payments, right? IMPS, NACH, and that's where one would put things like Aadhaar payments and tolling. So tolling the experience at the toll booths now is phenomenal. With mandatory tolling, as long as, of course, you don't get stuck with somebody in front of you who's having a debate with the guy at the tolling window. And there again, the government has now, I think, made certain announcements on how they want to take that forward even further, and we're very much there in the thick of things.
Right. Since we're talking about inclusive growth, and that's the theme of today's entire summit, you mentioned offline payments, and also we were talking sometime earlier about how cash is still predominant in the Indian market. Your cash to GDP ratio, if I'm not mistaken, is still around 13.7. It's the latest figure that I have. It was around 8.7 at the time of demonetization in 2016, 2017. It went up to about 14.5, but it's come down a little bit now. But do you see, digital payments like this being able to completely disrupt that market, bring it down?
I think it's brought it down phenomenally, So when you referred the value of transactions, right? Not just volume of transactions, but value of transactions. Volume creates a velocity, the frequency with which we are able to make these payments. But value reflects the actual impact that it is making in GDP terms. So actually, 2 trillion is more than a turn of the GDP. Yeah. Having said that, this is retail payments, right? So there are many spaces and swaths of the economy which are beyond the realm of just pure retail payments, retail digital payments. So there are large value payments happening in many sectors which may or may not necessarily be amenable to the kind of solutions we have right now. So I would rather craft this and say, what is the growth of digital payments, digital retail payments, and to what extent are they solving that part of the puzzle? And if you look at anecdotally, today if you go anywhere and you're trying to expect change, you're probably not going to get it. I've had foreign visitors come in and say, I want to just collect some notes and coins, to take back to my son, and I couldn't find anything. So I think, yes, it's not a quantitative number, but I think it's a qualitative dipstick sense to say that when it comes to retail payments, clearly we've moved eons on the digital side. Broader GDP and cash to GDP is, I think, a conversation that has many more layers to it.
But what about certain sectors, like we were just speaking a little earlier about, the agriculture market, probably housing, infrastructure, where you have daily labor. There's still a lot of cash transactions that happen there. How do you think that can be reversed? Even though, there were Jan Dhan accounts announced, and almost probably large swath of the population has Jan Dhan accounts, but they're not active. So how do you think that can be activated?
Actually, a large part of these accounts are active. They are active on Aadhaar payments. Okay. Sometimes they're active, and I have we have a number of use cases where security, for example, right? Large security forces are paid with a prepaid card. So their salary is actually loaded onto a prepaid card, which then they can cash it out or use it for whatever purposes they need. So I think that's a process, and slowly that share is increasing by the day. Now, if there is intention to stay out of the formal economy, that's a completely different problem. But outside of that, I think people find convenience. Okay. And the use cases are there as long as it's within the limits of retail digital payments.
Okay, so so India is considered a leader in the digital payments space, and we are, thanks to UPI and the whole India stack, taking this to the global markets now. If I'm not mistaken, we are close to 30 markets now where we're talking about UPI transactions happening. Where does that stand?
Yeah, I think, there are different streams there, right? The first one, the most simplest, is that every NRI wants to use UPI. When they travel into India, they want to use UPI. When they are trying to help their family or friends, or, make some bill payments in India, etc., they all have some either family or some, infrastructure in India that they are trying to support. So they're really, really keen to use UPI. Every foreign visitor into the country, notwithstanding the fact that they actually find it difficult to use cash, they want to use UPI. And this is a basic stream of services that has now been opened up. Then come the actual international pieces, right, which has 3 legs. Yeah. One is to say how are remittances happening, and both inward and outward remittances, and a number of corridors have opened up there. The second is actual deep integration at this level, so that somebody traveling out from India can use UPI. And again, UAE is a market which is very well penetrated, Singapore, and there are some where the market enablement is already in progress and some that are in the phase of early MOUs being signed and so on. And the third is really lift and shift of the whole tech stack, guideline, operating model, both for RuPay and UPI. And the UAE, for example, will be one example of where that is starting to play out. So I think you're right in the ballpark, each at a different phase of that journey. But these are all the various streams in play.
Right, okay. Well, UPI is now almost ubiquitous with payments. What about your working relationships with mutual funds, insurance players, of enabling transactions there through UPI?
Yeah, so any payment system inherently interacts with the banking account. So it is a debit to a banking account or a credit to a banking account, and including insurance companies or mutual funds who will have a bank account.
Okay.
And in compliance to certain requirements, the credit has to reach those bank accounts. So inherently it is enabled today. But we do work, and a lot of work streams are there currently in progress, where solutions which are more targeted and focused towards the needs of these two sectors are under play. So for example, if you look at the investment side, there is a requirement to have validation of the account or validation of the PAN before a credit is actually made to that account. So that is in progress, obviously subject to certain regulatory approvals and so on. So that will solve a need so that it's not a two-step process, that validation is happening independently followed by a payment. It can be stitched together. Similarly, of course, in the IPO space, I think UPI is already a strong player. It's called Block and Pay, and supports the ASBA process. About 55 to 65% of all IPOs when it comes to retail subscriptions is happening on this model as we speak. Okay. Now, there's also a proposition called the single block with multiple credits that can help secondary market transactions, and certain pilots are in process there. So a slew of actions happening on the investment side of things. As far as insurance goes, I think the need of the market has been around how do you stitch this whole claim process together, yeah, right? How can that become platformatized? How does one look at really addressing the need of making a part payment with your own funds and the rest of the payment being through the claim? So again, very interesting solutions being stitched together. The basic subscription service around UPI or RuPay AutoPay already supports what I will call mini SIP investments or small value insurance premiums. Yeah. So some basic solutions are already in place, and many of them are starting to now getting stitched together. And I think broadly this is what the industry calls embedded payments. So basically you're embedding the payment into the flow of that transaction in a way that makes the whole process more seamless, and it's not required that there are multiple steps involved. Like the ASBA process, when it happened, I think it killed the whole end-to-end process from about 10 days to hardly a day, right? And without blocking the funds of the investor. So I think those are the kind of significant changes that can come about once these implementations are in force.
Right. The other thing that has been an ask in the industry is about enabling credit over UPI, and how would you go about probably valuing your creditor, or if there's some kind of a credit score that can be done through the UPI transactions before giving them credit?
I think this is sort of in force and being deployed today using two models. One is, of course, it could be the bank and the customer of the bank who already has visibility to the digital payments and uses that data to really evaluate the propensity of a user, the credibility of the user, the kind of funds flow that the user has, based on which they are able to then provide credit. The second is using the account aggregator infrastructure, again a very strong consent-based architecture, where a user can ask for their data to be provided to a third party who then provides the credit or scoring interface. So I think both of these are in play, the first one to a very large extent. And in India, we really have a lot of opportunity there, because when it comes to our credit mechanisms, we still look for salary slips, and we still look for a lot of documentation. Still, look for not surrogate information that tells us that there is a steady flow of income, that tells us that this user is someone with high level of integrity, reliability, cash flow, which data can do, right? And so we are starting to see that in a very significant way starting to play out.
The other thing I wanted to ask you about was, UPI is a very technology dependent service, right? And there is a certain failure rate, but how much of that is related to technology and how much of that is probably from the business decision or from the buyer side?
So the technology one is, non-negotiable and not acceptable from the user standpoint. It absolutely has to work, right? And all the way, if you look at a flow from the merchant to an aggregator, to an acquiring bank, NPCI switch, whatever this may be, let's say it's UPI or RuPay. And then we have the issuing bank, which is the bank of the user. This transaction end-to-end has to work through all these hops. And we look at a benchmark of 1%. So that's 1% of the transactions, not more than 1% of transactions can fail because of an issue in any one of these areas. Now, and there are many mechanisms, that we really look at for that. Earlier, there was a situation where if there's one large player who had a problem, then there is sort of a, pile-up effect on everybody else. And those kind of challenges were there. But with every issue, I think as technology comes in and solves it in different ways, we're able to isolate so that there is no follow-on impact at the overall ecosystem level. And largely, most players are in sync with this. And this is something that is tracked at a regulatory level and, tracked at NPCI. And of course, we have our observation centers where we look at this data very strongly. When you look at business decline, which is really more in the hands of the user, and that can come from different things, right? Somebody does not have enough money in the account but is trying to make a payment. And these could be errors also. I have a couple of accounts, I don't know where, I have some funds and I'm trying to make a payment from the other account. Then I correct it and I make the correct account. But in the system, it will still show up as sort of a failed transaction. But there are also cases where customer awareness, customer action by way of enablement. For example, RBI is quite particular that users of cards have to activate and enable themselves for e-commerce, international, contactless, right. National, the offline transactions and so on. And if the customer is aware, not aware, or sometimes, I've had people tell me that I had enabled myself, but then I thought, why I'll switch it off, and then I traveled abroad, and then I was not able to change it back. So all this stuff happens. And those sometimes lead to certain level of business declines.
Okay.
But benchmarks that we look at is about 1% on technical, and about, I think we look at 5 as a acceptable number when it comes to business declines.
Business decline. But again, there's a very high dependence on telecom networks, right, for these transactions to go through, because internet connectivity itself. But you were talking about offline transactions. How much of that, in terms of percentage of transactions, is now offline?
Very, very low.
Very low.
Very, very low. And it will continue to be because we do have a pretty good connectivity, data connectivity in the country today. So I think offline transactions as a use case will slowly start building up. And even as it builds up, one would expect it to be a lower contributor. But in that time of need, it sort of still helps to provide a reliable service.
Okay. What about caps on transaction limits? So far it's been about 1 lakh a day, I think, is the recommended transaction limit that you have. Different banks have different limits within that limit. When do you see that being raised, or in other use cases where you can actually have a much higher limit?
Yeah, there's a continuous review when it comes to limits, right? So 1 lakh is a UPI limit. On IMPS, for example, the limit is 5 lakhs. When it comes to RuPay, there is no product level limit. The limit is based on the credit lines the customer will have and the risk profile the customer has with the bank. But within UPI itself, there are now subcategories that have higher limits. So there's a limit of 2 lakhs when it comes to paying what is called verified merchants, which means merchants where larger ticket transactions are expected to take place. And they get whitelisted on the system, and with these merchants, up to 2 lakhs can be made. For certain use cases, like the investment use case, the limit is up to 5 lakhs.
Okay.
So there is 1, 2, 5, all these are available limits today. And this is reviewed on a continuous basis. So it's not to say that the limit is static in nature. It is purpose-based and need-based. It has a risk management element balanced with customer convenience. Okay. Right? So if we find certain transactions that are going beyond that limit on a continuous basis, then that limit can be reviewed, okay, and the limit can be upped.
The other thing is, of course, I have to ask you this question on security. I mean, the maximum number of digital payment frauds does happen on UPI. Somebody has scanned a QR code, or somebody has put in their PIN number at the wrong moment. So what are you doing to kind of educate the consumer? I mean, at the end of the day, it's actually the consumer's wrongdoing at that point. So what are you all doing to kind of educate the customer from the NPCI's point of view? Or are you putting in place some more checks that can?
So there are three levels of controls here, right? One is the actual technical and technology-driven control, which is completely bulletproof, if I may use that word. So really, between all the authentication factors available and the way the tech works, there is no compromise at that level. The second is really limits. So when you look at, and we just spoke about that, right? Why do you have limits? So 24-hour cooling, because we found that usually new users become more susceptible, or somebody is asked to download an app and immediately make a payment. So this gives a bit of window where no one can be made to take those kind of actions. On the technology piece, we also now have fraud AI models, which thanks to the industry, a lot of fraud that gets reported in, gets analyzed, investigated, because a lot of it is also misleading. It could be just a dispute. But once it is identified as a fraudulent transaction, that then goes into a model where if the model has a very high score beyond a cutoff, then we immediately reject the transaction. And within a certain window, it's provided back to the bank that can take a view on whether they want to, really process or reject the transaction, because they will know how savvy their customer is.
Okay.
So these models are evolving and help to have a view which goes beyond the intent of the customer. And the third is customer themselves, because all frauds today are socially engineered. How do you really identify this whole model of social engineering? So there are very large campaigns that practically everybody in the industry is running. And there is also a joint committee called the Financial Literacy and Advocacy Committee, through which we do this at an industry level.
Okay.
In terms of awareness campaigns, getting people aware of what the modus operandi is, and how they don't fall prey to that.
Right. If you have any question, we can take one question now, and then the gentleman there.
Yeah. So I have two questions for you, ma'am. First is on the digital payment score. You also talked about account aggregator-based underwriting when you were speaking. A few months back, you mentioned about digital payment score at a summit in Mumbai. I would love to understand where does that stand now and what should be looking forward to around that. The second bit being on UPI Autopay specifically, UPI Autopay. While the technical decline for UPI is less than 0.5% on more, the top 5 banks, is still between 5 to 12% on UPI Autopay. And even the business declines while around 70% on execution. On NACH, it is around 25%. So why is that, and what are the steps being taken to resolve that by NPCI?
So the first one is, I think, exactly what I had mentioned earlier. So on the back of a consent architecture, right, data can be provided on the back of which there is a good level of work happening on the credit scoring basis. Now, the second point on technical declines. Now, technical declines are addressed in two ways. One is, certainly the whole ecosystem has to get sorted and oriented end to end. And the second is conversion to digital, because NACH also has a challenge that a good part of the transactions are still on paper form. And on paper form, one is still doing signature verification manually and so on and so forth. And insufficient balance also tends to be one of the primary reasons. So insufficient balance, of course, will need pre-notification, and NACH earlier did not have this mandate for pre-notification, which is being introduced now. So that should also help the user so that they know that, they need to fund their account to fulfill this transaction. But as we move away from paper to digital, that should help the cause when it comes to better level of business declines. Now, the whole overall, the success rate which combines both of these, is a journey that is continuously tracked, and every part of the ecosystem, right? If there are 350 banks live on UPI and 50 apps live on UPIs, each one of them needs to deliver that service at a certain level, and that's currently in process.
Okay, since we're out of time, I just have one quick question for you. The budget is around the corner. Do you expect the finance minister to make any announcements that will be benefiting NPCI?
So I think we'll wait and see how that plays out for the digital payments ecosystem.
Okay.
So usually there does tend to be the last 2 years there has been an incentive that has been offered to the industry. So I think we'll have to see what it brings to the table this year.
Great. Okay, thank you so much for this enlightening session, and hope to see you again next year maybe.
Thank you.
Thank you.
Thank you.